Good morning and good afternoon, everybody, from where you're dialing into this conference from all over the world. And welcome to this panel discussion, a panel discussion where we will try to accomplish the impossible, is actually bringing entrepreneurs and VCs closer together. Because often there is a lot of tension and almost fighting between VCs and entrepreneurs. And what we will try to achieve in this panel is actually bringing them closer together, cooperating, and actually make both of them winners in this game. And I'm also very pleased and honored to introduce in the next slide the panelists. And first of all, I would like to ask Dede Goldschmidt from Samsung Catalyst Fund to introduce himself.
Thank you, Peter, and hello, everyone. So I'm Dede Goldschmidt, known as Dede, and I head the Samsung Catalyst Fund. Samsung is the leading core tech player, and at the Samsung Catalyst Fund, we apply the lens of the startup world to support new business creation for the organization. We invest in deep tech infrastructure and data-enabled platforms, domains such as data center and cloud, AI, quantum computing, networking and 5G, automotive, robotics, and digital health. We've made quite a few semiconductor-related startup investments. I will not name all of them. Could mention perhaps Habana Labs and Sambanova that we've done with our friends at Intel Capital, or also mention Fungible and Graphcore, to name a few. And there are plenty of other exciting companies. So we're stage agnostic. Although we usually don't invest in pre-seed or seed, we can lead, co-lead, or follow. We usually prefer to have a board seat or observer so we can fully support the management. After our initial investment, we work really hard for our portfolio to facilitate partnerships with our business units. And in general, we're driven by the 1 + 1 = 3 philosophy, working closely with brilliant entrepreneurs and disruptive ideas to create value for both the startup and Samsung. And to you, Quinn.
Okay, thank you, Dede. And next, I would like to invite Quinn Lee of Qualcomm Ventures to introduce himself.
Thank you, Peter. Hello, everybody. So my name is Quinn Lee. I head up Qualcomm Ventures globally. So we're the corporate venture arm for Qualcomm. We've been doing the investing in the venture industry for the last 20 years. We have invested over 350 companies. And currently, we manage a global portfolio of about 150 companies with a little over $1 billion under management. We invest across our ecosystem in areas such as 5G, artificial intelligence, IoT, automotive, and enterprise and networking. So we also look for partnerships with our portfolio companies in terms of go-to-market, technology collaborations to help portfolio companies grow their business globally. So thanks for the opportunity to be here.
Thank you. Next, I would like to invite Anthony Lynn from Intel Capital to introduce himself.
Sure. Thank you, Peter, and welcome, everyone. This is Anthony Lynn. I'm head of Intel Capital. We are a leading corporate venture capital firm with a global presence. We are celebrating our 30-year anniversary this year, and over that time, we've invested in approximately 1,600 companies with more than $13 billion deployed. We invest in all stages, from seed stage to late stage, and we typically lead our investments, and we are thesis-driven with a focus on 5 key domains. The first is edge, 5G, and autonomy. The second is client and gaming. The third is cloud and AI infrastructure. The fourth is cybersecurity and enterprise applications. And the fifth is silicon design and manufacturing.
Okay, great. Thank you. And then I'm going to introduce the entrepreneurs in this select club. And let's start with Zachary Vernon of Xanadu AI.
Thanks, Peter. I'm Zachary Vernon. I'm the head of hardware at Xanadu. We're a startup based in Toronto, Canada, and we're building photonic quantum computers. Last year, we launched the world's first cloud-deployed photonic quantum computer, and we'll be continuing to scale that for the next several years, ultimately aiming at building a universal, fault-tolerant, fully error-corrected quantum computer based on the unique approach that photonics gives you.
Okay. Thank you. And then there is Or Dannen from Halo.
Thank you, Peter.
Please.
So my name is Or. I'm the CEO of Halo. We are a Tel Aviv-based startup building edge AI processors, extremely power and cost efficient, mainly for processing visual signals at the edge. Applications span from autonomous vehicles, robotics, manufacturing, security surveillance, retail, and actually many other fields. We're now ramping of first generation production, and of course, very bullish on this field.
Okay, thank you very much. And so my name is Peter Vanbekbergen. I'm a partner of imec.xpand. imec.xpand is a stage agnostic captive fund. We do early stage investments, but we'll also follow at later stage in deep tech companies that actually make a link to imec technology. Okay, well, thank you all for these nice introductions. So let's move on now to the topics that we want to discuss. And clearly, what I would like to start with first are the items that are clear turnoffs for investors. And I would like to invite the investors to comment on the topics that they've introduced themselves. And then for the entrepreneurs to react to this and see how they can handle better these type of turnoffs. And let me quickly introduce these items. So there are basically three main categories. And the first one that clearly came out as a main topic is customer focus, where one of the turnoffs for investors is that entrepreneurs cannot clearly convey the value and product proposition, often introduce a solution that is actually looking for a problem, and often also focus on technology innovation and disruptive architectures instead of focusing on the customer needs and pains and the problem to be solved, or the customer problem to be solved, the customer workflows, and so on. So clearly, not enough customer focus, but too much technology focus. That's one category. The second category, and those are actually two different topics, is on capital, where on one hand, some of the ventures actually push out a lot of the capital to the next rounds, especially when they need to transition to smaller nodes and geometry where a lot of money will be needed. And we see that founders are insisting on raising the capped amount and pushing back investors to the next round. And that is clearly considered to be suboptimal. But on the other hand, also we see entrepreneurs that are taking too much money when the capital is abundant. So these are two different topics on the capital front. And then last but not least, also one of the items that is a turnoff for investors is when the entrepreneurs are not doing enough diligence on the VCs that they have selected and the value that they could or could not bring to the table. So these are the three categories, and I would like to invite now the investors to comment on these topics and the entrepreneurs to react. Who can start of the select club of investors?
I'm happy to jump first if it's fine with my colleagues here. First, I want to say that we have tremendous respect to entrepreneurs and founders, right? I mean, even the heading of the slide may be perceived as if, frustrations, etc. I mean, there's no such, I mean, it's so difficult to be at the helm, right, of such ventures at such phase of the life cycle of the company, that we have a lot of respect, and we really try really hard to be very respectful to founders' time, attention, and things like that. I think for at least for the first 2 points, the way we as investors operate, and many investors, we believe work that way, is really thematic. So we really look at, the global problem that is to be solved, right? The trends in the market. I mean, for example, we can look at last year, there's an acceleration of digital transformation, which leads to opportunities in down to even new semiconductor chips. But the whole point is to stop at the origination. What drives the need, and what are the ripple effects at the different layers of and who are the powers that are driving it. For example, when there's transition to the cloud, are things being defined by the hyperscalers or by the customers of the hyperscaler and so forth. Having a good understanding of who has the need, and only then have a look at the approach. On the financing, it's really, as you said, these are 2 points that are perhaps contradicting, but it's not just about take as much of money as you can when you can, right? It's just a matter that as opposed to software, for example, in semiconductor, early on you need to have quite a lot of capital, right? It's not like a software company that you develop quickly an MVP, test it in the market, and then do your gross capital. So sizing your financing is very important early on for a semiconductor company.
Okay. Can the other investors also comment on their items?
Sure. This is Anthony. I generally agree with Dede's comments. I think, in terms of the capital and the VC selection, I think that's a very key important part. Picking the right partner. There is a lot of capital out there in the market right now. And, one, do not take more than you need. And then two, picking the right partners to invest in your company. I think, as you heard from both Dede and Quinn, we all try to bring the value of our parents to the table to help. And so a lot of, where we focus our time is around portfolio development, where we help, where we actually have a team that partners with the investment team to develop a plan for each company that we invest in. And that could be both internal engagements and also external engagements. So that's one definitely very key important element of picking the right partner.
Okay.
Yeah, this is Quinn here. Just agree with both Anthony and Dede's comments on selection of the investors. I think from an entrepreneur standpoint, you want to find your investment partners, whether it's a corporate or whether it's a financial VC, that's a good fit for you and your business. And the investors have the expertise to bring some help to you as an entrepreneur as you grow the business, right? It's I call it a short-term marriage where investor invests in a company. It's a journey of 5 to 10 years potentially. So you want to make sure that you select the right partners in that process. And on the point about customer and product, I think oftentimes what we wanted to hear is what's the problem that the solution or product the entrepreneur or the company is trying to solve in the marketplace versus it's a solution is looking for a problem, right? We want the entrepreneur to articulate what's the problem in the marketplace you're trying to solve, and what set of customer you're trying to solve the problem, and what's the value proposition you deliver to the customer. It's very important from building a business standpoint versus you just have this cool technology or idea that's looking for a problem to solve.
Okay. So maybe now is a good time then for the entrepreneurs to react to this, and how do they look at these items when they are raising capital, presenting to VCs, and how do they address these turnoffs, let's say?
I could comment on the second bullet point there in customer focus, which speaks to me. Solution looking for a problem. I agree with this point. This is a very common thing we see, especially in the quantum industry. I like to point to quantum sensing as an example, where there are these techniques in academic labs that could, in principle, improve the limit by which you could sense very small signals, but really this is actually not solving any problem in the market today. And so you see a lot of maybe startups or startup hopefuls failing because they're trying to, a hammer in search of a nail. That nail does not existing. I do think, conversely, though, on the other side of that, or maybe the driving reason behind that is in these extremely deep tech disruptive fields, the companies need to be started and the initiatives need to be started by people who are defined by their tools. So it is not, natural entrepreneurs or business people that have the tools that are actually going to generate these disruptive technologies. These comes from people working with their heads down in labs. And so to solve this problem, what you need to do is for investors to integrate much more closely with those labs and actively hunt for these. we saw a pretty good example recently. If you guys know about IonQ, IonQ is one of the hottest quantum startups. Just last week, they made the news that they're raising a SPAC, and they're going to raise something like the better part of $1 billion in funding. IonQ was not founded by an entrepreneur. IonQ was founded by a professor, and actually that professor was convinced by an investor that they should write a business plan and then take it to market. And that founder, Chris Monroe, is not even directly involved in the business anymore. So, but you see this sort of, well, at least so far, it's a success story coming out of a lab where it wouldn't have happened if investors hadn't been actively hunting for these very difficult technical solutions to problems that the person in the lab with their heads down probably wouldn't have been aware of. So I think there needs to be a marrying of the two to solve that problem.
Portfolio company of the Samsung Catalyst Fund, we're very proud of it. So
maybe to add on that, I also fully agree with the customer focus point. It's really challenging topic, and I think especially when you're looking, you mentioned the software companies earlier on, when you're looking at a cycle, I think a semiconductor company, you're fast 3 years to market, 4 years, and you're not in the market when you're starting. So you have lots of gaps to fill, and there's also lots of guesswork to do. And on the other hand, I also strongly think that eventually, if you don't bring strong enough tools, then you will not win the game. So there's a bias there to shift about talking about the tools rather than on the problem itself. That's I completely agree with the point. And it's certainly a challenge. I would also say on VC selection, I agree with the point on long-term partnership, and not only on being able to support the business, that is of course really important, but also investor that is like-minded to the goal that you would like to achieve. It's a very long journey, and making sure you're working with the right people is extremely important as an entrepreneur.
Now, I have one question for you all with respect to customer focus, because, well, clearly sometimes you have indeed startups where it's very clear what type of customer demands they are addressing, and that is all very clear. But sometimes you also have the more visionary companies that look ahead in the future, trying to predict what a customer will want, where this problem becomes much more of a visionary challenge. And I would like to hear, that's often also a particular problem, because if you wait until the customer demand is there, often you're too late. So I would like to hear your opinion about that. Maybe
I would like to share some from my experience. As I said, we're working on AI inference at the edge. We started in 2017, and when we started, it was clear that this is a real thing, but and at least I don't think highly visionary, but we understood it's going in the right direction. But there were not many customers who were actually using it and deploying it and giving real requirements. And when you were talking to these customers, you could see that, to make a plan by these requirements in 2017 would not be a good idea for 2020 or 2021. And at least one of the strategies that we work with is working a lot with, at this point, with automotive companies. Found that this was a very good starting point. We fully understood that the possibility that these companies will go to mass deployment in the relevant time frame, as today, is pretty much unlikely. But on the other hand, they could portray their needs or from actually trying to work on the product. So this was a way for us to bridge the time gap of being able to actually work with the customers, but knowing that this will not be at least the initial end customers. Took me a while to understand this strategy, but once I got it, made a lot of sense.
Yeah, and Peter, from an investor perspective, I think it's very important. This is, we assess the caliber of the management team and their ability to pivot if things change along the way. So I think that's one very key thing that we look for as an investor.
Okay. Okay, thank you. I think that all makes a lot of sense, and thanks for all the comments. I think maybe now is a good time, given the limited time we have, to turn the table now and go to the, let's say, the turnoffs or some of the turnoffs that entrepreneurs experience. Let them comment on it and then have the VCs react to this. And so basically that brings us to our next slide, where basically a few of those elements were brought to the table. And basically, one of the turnoffs here is that when VCs are asking questions based on metrics that really do not apply to the technology in question. So, for instance, somebody asking an EV company how many miles per gallon their cars will get. Another one is also just taking or believing the competitor's claims at face value without correcting for the PR spin. That is a second element that is a challenge for entrepreneurs. And as a last turnoff for entrepreneurs is the question, are you investing in software? So those are the three points that were brought to the table by the entrepreneurs as one of the challenges they are facing talking to VCs. And so I would like to have first the input on this from the entrepreneurs, and then let's see how our VC part of the panel will react. And maybe we can start with Zachary.
Sure. So maybe I'll comment on the first 2 points. I think this is a real common problem, especially in the early, very early days deep tech areas. And quantum is a very good example of that. I think, in a sense, it's a symptom, or it's a good symptom to have. It means that the technology is really disruptive if the VCs don't even know what questions to ask, and that could mean that the technology, of course, is not viable. But if it is, it's a good sign for the company if the usual questions don't apply to them. A common one in quantum, specifically photonic quantum computing, is what's your decoherence time, right? And that metric, for a bunch of technical reasons I won't get into, is not applicable really to photonics. There are equivalents, but even within the companies and approaches where such a question is applicable, it doesn't take into account the holistic picture. So one company could have, or one approach could have a much better answer to the question than another, but it's in fact not a better approach, because also gates take much longer to apply, for example. And so the net effect is not necessarily beneficial. So I think you need to be open to letting the entrepreneurs or the companies actually try to, especially in these very early days technology startups, define the questions themselves, define the metrics themselves, and try to start with them making a case for what the right questions and what the right benchmarks they should be held to, especially after investment as well. Right. Make sure that there's an agreement that, when a round is closed and now you're going to be keeping track of progress at the quarterly board meetings, that you're making sure that you're asking the right questions so you can really see what progress is like, and not have the company and the technical team start driving toward milestones that are irrelevant technologically, but maybe they're only to satisfy the investors or the board. And then the other one about taking competitors' claims at face value, I think this one's obvious. It's, again, especially bad in these hot fields like quantum, probably also exists, I imagine, in the EV and battery world and so on, and maybe AI world, where there's a lot of hype. And hype doesn't mean that the field is dead or is really suffering, right? It's just mean that it's overheated, right? It needs to be cooled a little bit. And that can really lead to a mismatch in where the most honest startups or the most honest entrepreneurs and technical teams are at a disadvantage for not being aware or playing the game of the PR spin. And so I think a layer of correction is really needed, and it'll get a better outcome for a VC, where they're going to, by investing in perhaps startups that actually claim less, they may actually end up ahead by getting the more honest entrepreneurs and the honest approaches.
Okay. Maybe, Danon, you want to comment on this, please?
Yes. So I'll comment on the third point. Both companies are actually the field of computing. So in many cases, when talking about the technical aspects of the venture, lots of talk are being done on the hardware front. But at least in my field, the processor, I think it applies to many technologies, not selected only on hardware values, but mostly on how it's being used through software. And I feel that there's a huge disproportion between the amount of time that is invested in discussing the hardware, which is of course in the heart of the venture, but the actual use is through the software. And eventually, if you look at the long term, what makes a successful company, of course for my field, but it's relevant to other fields, is the software usage of it. I think, by the way, one of the good strategies that some VCs are employing is talk to developers that are working on the platform. This is a very good way to reach that gap of knowledge, but still, I would expect VCs to be more knowledgeable about these topics.
Okay, thank you. I'm sure the VCs will react to this.
Of course.
I'll jump in first, maybe. I think those are good points raised. I think goes to the point of the partnership or selection of the investors. For the investors that know certain space well, they should be able to ask the appropriate questions and also understand the competitive landscape. So maybe the first meeting you may get a wrong question asked, but if you have a second meeting with the investor, still the wrong question is asked, then the investor is probably not versed in the particular space, and that's probably maybe not the right partner for you, right, as a company. So it goes to this VC and entrepreneur relationship, which is a long-term relationship that you gotta be comfortable working together for long term, right? So that's, I think, important. And also, I think it's important to because in venture firms, there's different partners focused on different areas as well. Some partners may be versed in software, some may be versed in deep tech. So find the right investor within a firm is also important, right? Just because a partner you're talking to may not be versed in a particular area, you need to find the right investing partner, if you will, who has the domain knowledge in the field that you play in. I think that's also very important.
If I can jump in.
Sure.
Can I, Peter?
Go ahead.
First of all, I think these are great questions. Touching upon the second one and the third one, first, I think this is very true, right? We, as investors, we need to be very careful and not educate ourselves just based on press releases and so forth. That it's a very valid point. At the same time, many times investors have the luxury of meeting different companies in the space. So we were able to collect different angles, right? Which maybe at some instances can give us broader view than a company that is working specifically on their product. And beyond that, I would say one thing we see often is like you have the competitive landscape metrics, right? That compare the company with other competitors. The company, everything is green. The other companies have lots of reds and so forth. And usually we tend to ask the companies, even if it's a portfolio company, I mean, if you were on the board of the other company, do you think they would show the same thing? Probably they have a different perspective of the world, right? So it's important to be also dispassionate. It's not always, we're best in everything, but, we're strong in that. What are our weaknesses and so forth? On the software side, I would say that's also a very important point. So as the smart is gradually shifting from the hardware to the software, it's really important to have software teams early on, right? We have one of our portfolio companies, CEO used to say, it's a chip company, right? He was saying, I'm not a chip company. I'm a software company that has a chip. So it's really important to focus on that early on, and also in the due diligence, of course, of investors. That's a critical point. To make sure that the company understands the scope of the challenge, allocates the resources early on, and so forth, according to what you've said, or also because that's very important for the customers of the company.
Yeah, this is Anthony. I fully agree with the comments made by Quinn and Dede. I think as it relates to software, software is definitely becoming more and more important. And if you even look at our portfolio, I think around 40% of our investments have been for companies. So we truly bring the value of, having experts in software, at the table. And then also from a financial perspective, we truly dig in. We don't just right? And we dig in. We try to help the portfolio companies try to acquire the customers. We really dig in on the customer acquisition cost. We dig in on how they monetize on their platforms, and then we also help them retain their customers. What is their long-term view? What is their churn rates, etc. So we truly dig in. We and help our portfolio companies that way. So.
Okay, great, thank you. Any other comments?
If I may, from
Sure.
like looking in the mirror, these questions that are that we as entrepreneurs, we don't like investors asking them. There's actually questions that are very similar to what customers are asking. So, and I usually also get annoyed with someone asking about a PR that is oh, this company is claiming 10x better than you. No, it's not true. They're not measuring it right. But if you have this problem with the investors, you also have it with your customers, probably. That was the case for me in places where I had this feeling. So it is actually also a good exercise in how you build a message towards investors. So while this being annoying, it's also being productive.
Can I add an observation?
Sure.
Completely agree with what Quinn said about this short-term marriage, right? 5 to 10 years. As a matter of fact, it's even worse than marriage, because married, God forbid, if it doesn't work, you can get a divorce, right? You can't really get a divorce between the shareholder and the company. That's why the entire process from day one and even before day one, this is really, really important because it's a relationship that it's very, very difficult to break. Doing diligence on the company, doing diligence on your investors, forming the relationship, this is very critical, for the success of the company and success of the investors, of course.
Yeah, and then also just maybe a quick add to the point on I think it's very important to build the trust between the investor and the entrepreneurs, right? Because the relationship is potentially over many years, it's very important in the beginning, even in the start of the conversation, that both parties have respect for each other, have trust for each other. You're going to go through up and downs in the journey of a startup. We all experience that. There's good times, there's a lot of challenging times. So it's very important to have these trusting relationships and ability to work together over this journey.
Okay, I think we are coming to the end of our panel discussion from a time perspective. If I may conclude, what I've learned from this discussion is that if there are clear turnoffs on VC side or entrepreneur side, this is probably caused by the fact that there is not a good match between the two partners, the entrepreneur on one side and the VC on the other side. So what I've learned now is that if these are there, probably there is not a good partnership, and it's better not to move forward that way. And from the moment that those turnoffs are not there, you find a partnership, then obviously that's a great way to move forward. And obviously it also means for the entrepreneurs that they need to have let's say a value proposition that is attractive enough so that they can choose between VCs to find the right partner. And that's clearly also a challenge there. So, but that's at least what I've learned from this discussion. And so, I want to thank you all for your time and effort to prepare the panel discussion and to participate. And I also hope that this was informative for the audience. Thank you. And thanks all.
Thank you.
Thank you.
Thank you.
Thanks.